My name is Zena Wood, and I would like to present a paper that has been written by myself and my colleague Phil Godsiff on facilitating data sharing and ownership in a future insurance market. This work relates to submission number 97. This work has been done as part of 2 EPSRC grants, namely the Digitally Enhanced Advanced Services Network Plus grant and DigitLab, an EPSRC Next Stage Digital Economy Research Centre. Over the last year, our research has focused on the UK insurance sector. It is the 4th largest insurance industry in the world and the largest in the EU. In 2017, the insurance sector employed over 300,000 people and contributed just over £35 billion to the UK economy. Like many sectors, organisations within insurance are undergoing digital transformations, where they adopt new technologies to innovate their organisational strategies. Data is a key enabler of digital transformation. Although the insurance sector has made use of data for many years to help understand and provide risk models, the data that is now available and the technology that can manage and analyse that data has opened up new opportunities for innovation. Our discussions with insurance sector experts and the results of recent industry surveys have shown that the sector must embrace these innovations if they are to thrive in the digital economy. Our research has shown us that the future of insurance must fulfil 4 key requirements. It must be data-driven, be customer-centric with services delivering personalised outcomes for customers, be built upon a model of risk prevention instead of the traditional protection against loss, and adopt an ecosystem approach. In previous work, based on these requirements and the concept of improved sustainability, we developed the concept of circular insurance, an ecosystem that uses innovative digital technologies to encourage and reward behaviours that embrace and enhance circular economy principles. A possible solution design for the ecosystem, seen here, included the reliance on inbuilt data sharing mechanisms, the use of personal data stores, and a form of data sharing. More details on circular insurance can be found at the reference on this slide. The implications for policy and regulation of this future insurance ecosystem were not addressed. It was clear that a future ecosystem approach in insurance would require further regulation and policy to that which is currently applicable. However, what this was not explored. Typically, policy and governance models struggle to keep up with the opportunities afforded by new technologies and new data sources, which can make it difficult for insurance companies to innovate and move forward. We've identified 4 particular areas where having an ecosystem approach that focuses on risk prevention, that is data-driven and customer-centric, would bring major policy and regulatory challenges. These 4 areas are data sharing, data ownership, data privacy, and data usage. Our research has started to explore in more detail how new technologies might actually exist in some of these areas. And today we want to explore these policy implications and how particular technologies, such as personal data stores and sharing platforms, might help. Each of the requirements of a new ecosystem will be considered in turn to show how we have derived these 4 areas. The first requirement of a future insurance ecosystem is that it is data-driven. Data-driven systems require access to good quality and accurate data sets, new data sources, and data sharing between organisations and individuals. These bring in important policy and regulation questions, particularly around data ownership, data trust, data access rights, and data sharing. Some of these questions can be seen here. The insurance sector has been managing large amounts of customer data for years. However, big data has led to more varied sources of data, including the provision of unstructured data and increasing amounts of personal data. That is information that relates to an identified or identifiable living individual. To address questions over data ownership, accuracy and access rights in a future insurance ecosystem, we propose the use of personal data stores. Traditionally, a personal data store can be considered a vault, which is owned by an individual and contains their own personal data, and in this ecosystem, their insurance-related data too. The individual can choose who and what data they wish to share with others or restrict access. Putting individuals in control of their own data could help to improve the accuracy of data sets, especially when the value of the data and the benefit from that value is affected by its accuracy. In a future insurance ecosystem, we suggest organisations also have their own form of data store to help facilitate data sharing on a wider scale, allowing the emergence of new digital, data-driven business models. Data in the future ecosystem would be managed and shared by a data platform, which personal data stores feed into. In existing research, we have seen researchers suggest platforms to be trusted intermediaries, a way to provide transparent and fair data sharing markets that are self-regulating. Within circular insurance, this platform is referred to as the Risk Management Service Platform. All data sharing is done through this platform and personal data stores to preserve privacy. Technical solutions such as edge computing could also help reduce the amount of data that is required for sharing and improve data privacy. In existing approaches within the insurance sector, data is typically stored centrally by the insurance company. There is some regulation as to how it can be analysed and by whom, but it is not always as transparent to the individual who the data is about. The use of personal data stores and a suitable data sharing platform can be considered to improve on these existing approaches because the value is co-created and mutual with both public and private benefits, unlike the traditional approach. Within personal data stores and data sharing platform research, work has begun on developing the legal and technical infrastructure needed for these personal data exchange mechanisms. However, key policy and regulatory work is still needed. Ensuring widespread access to personal data stores and the removal of any barriers to owning one will need to be controlled by policy and regulation to ensure no individuals are excluded from the market. Digital literacy and digital equality will also be important considerations, and assessments would be required and regulated by policy. The principles of data sharing will also need to be identified in a common framework. These items are currently left as further work. The second requirement of a future ecosystem is that it is customer-centric. Digital technology is driving changing customer expectations and a desire for tailored services. Such personalised services require a much better understanding of the customer and knowledge of any changes in circumstances. So, for example, once a customer puts their house on the market, a company may wish to start offering services related to moving home. The collection and analysis of personal data would facilitate this personalisation and the delivery of services with personalised outcomes. A customer-centric approach would require a good and ongoing relationship with the customer, real-time data collection and analytics, and trust between parties. Additional relevant policy and regulation questions, above the ones we have already considered for data-driven systems, would include: what is the role of the customer? Who owns the technology that is used for data collection and analysis? Both these questions could be addressed in a suitable data sharing framework outlined when we discuss the data-driven approach. A third requirement of the future insurance sector is that it moves to a model of risk prevention. There is a push to more sustainable consumer behaviour and to make the most of resources. Both of these factors support the need for a model of risk prevention instead of the standard approach of understanding risk and protecting against loss. Currently, risk pricing is generally based on group data like actuarial tables. It is based on the pooling of risk and pricing based on that pooling and the need to make financial return rather than any other objective. A data-driven business model can facilitate better risk reduction. A model focusing on risk prevention would be more personalised, focused on individual and corporate behaviour change and preventing and reducing exhibited inappropriate behaviour. A model that focuses on risk prevention would require data collection and analysis in real time, the continued monitoring of what is being insured, and different models for risk and value. Additional policy and regulation questions that have not been considered yet relate to the transparency and explainability of algorithms, understanding roles and responsibility, ensuring that the vulnerable and disenfranchised are not disadvantaged, and understanding the consequences of changing behaviour. A model that focuses on risk prevention would need to make recommendations. These recommendations could result in a behaviour change. For example, the suggestion to use different fuel sources. Transparency and explainability of how these recommendations have been produced will be very important. Both are active areas of research within computer scientists. Each recommendation could have an attached probability and/or decision metric to improve transparency and aid actors in deciding whether they act upon the recommendation. The digital tracking and predictive analytics used to form the recommendations could lead to potential but unintended negative consequences that would need to be considered by the insurance ecosystem to avoid disadvantaging the vulnerable and disenfranchised. So as we've said, we must ensure transparency of how the algorithms have come up with their recommendation. But we also suggest the development of a digital fairness framework to avoid individuals being unable to get insurance. And this could be for a number of reasons. It may not be possible for some users to alter their behaviour in response to prompts or requests, for example, maybe as a result of a genetic condition. Not everyone may be keen to share their data due to the belief that knowing more about them would cause a rise in their insurance premiums and reduction in coverage. Greater insight into an individual's behaviour may result in an insurance company considering them too high a risk to insure. It is likely that there may have to be mandatory military cover, like motor third-party fire and theft, or government underwriting, such as in flood insurance. We suggest insurers within the ecosystem implement a digital fairness framework that would help them to consider the social implications for their decisions. The final requirement of a future insurance ecosystem is that they take an ecosystem approach. This would require a significantly enlarged regulatory environment and a multiplicity of regulators. Many examples exist of different regulators working together. A good example is the recent announcement of a new approach and policy on operational resilience in financial services, issued jointly by the Bank of England, the Treasury, and the Financial Conduct Authority. In addressing cyber resilience, this group of regulators is joined by the National Cybersecurity Centre and the National Crime Agency. A future insurance ecosystem will need to include a similar group of regulators, but also include those from insurance and data science. Given the wide reach of the insurance sector and the inclusion of international companies, regulation will also need to include international standards. Policy and regulation questions would include: who are the different regulators? How can regulators work together? And is there any potential overlap? Identifying the roles and regulators of the different groups will be very important. The ecosystem has been designed with representatives from the insurance sector, but a detailed stakeholder analysis would help identify the different regulators, their scope, and the roles that they would play in the ecosystem. To conclude, organisations with the insurance sector will need to embrace innovations that new technologies bring if they are to thrive in the digital economy. Our research has shown us that a future insurance ecosystem must fulfil 4 key requirements. It must be data-driven, be customer-centric with personalised customer services, be built upon a model of risk prevention instead of the traditional protection against loss model, and adopt an ecosystem approach. We've identified 4 particular areas where these requirements would bring major policy and regulatory challenges. These areas are data sharing, data ownership, data privacy, and data usage. Our research has started to explore how new technologies might actually assist in some of these areas. Future work would include the identification of the different regulators required for the ecosystem and the roles that they would play, the development of a fair data usage framework specifically for the insurance sector, and the development of a set of policy recommendations that will allow the ecosystem approach to be adopted. Thank you for listening to our presentation today. These are the contact details of the 2 authors of the paper.